Hey everybody. If you would chat in the chat box to confirm that you can hear us, I would appreciate it. And I'm going to drop the CPE link into the chat.
Loud and clear.
And so you can access that link. Now, if somebody gets in a little bit later, I think they won't actually have that. So I'll have to share it again. If you go down to your little monitor looking thing with the arrow and go to attachments, you should be able to download the handouts there. If you will let me know if you're unable to do that. We tested it here to ensure that would work, and it appeared it was. So if you would please do that, you will have the PDF handouts that we'll be going over. Alrighty, let me make sure I muted my phone.
Presentation went away.
Did it? All right. We are having problems with, for some reason my presentation keeps going away. All right, are we back?
Yeah.
Okay. All right. Well, I appreciate everybody joining. We're still probably about 10 people shy of the folks that registered for this, but we can't wait any longer. For those of y'all that haven't sat in one of these previously, some of you were in the one we did on April 30th. I go very, very fast. I set up this training initially for a 2-hour presentation, not really knowing what content I was going to have. And then we decided to split it up into 2 pieces where internal audit did a piece and I did a piece. And really there was really too much content for a 2-hour period, but we're going to hit it. You've got handouts that you can go back and reference. You'll have the opportunity to ask us questions at the end of the session as well as by email later if you did not get something that I went over. So without further ado, we'll jump right in. Did anybody say anything about not being able to get the handouts? Anybody say anything? Okay. All right. Well, here today is myself and then Chris Clark and then Kevin Jacoby, Brian Nanny, and Angela Sharperson are here on behalf of Internal Audit. And the flow of the training today, our agenda, we're going to break it up into 2 sections like I stated, and we're going to have to fly to get through this by 9:55, my section, but we're going to go from 9 to 9:55, financial statements and general topics. 10:05 to 11 o'clock, Kevin will be talking to you about the agreed upon procedures.
Chris,
Yeah.
You need a statement for CPE.
I will. Yep. So there's a 10-minute break scheduled in between the 2 sessions where you can get a potty break or refresh your coffee or whatever you need to do. The survey, there's a survey link that I put in the chat in the conversation where you can open that up and you'll be given an opportunity to put in your answers for participation, and based on that we will honor and award CPE credit to those that need it. If you are not in need of continuing ed, then you are not needing to participate in that. We also issue partial CPE if you only attend one of the 2 sessions based on the attendance turned in. And we'll issue a CPE certificate sometime probably later this week or early next week to those that earn hours. We're also recording this session. Last session we tried to, but I had some technical difficulties, so this one actually is being recorded right now, and we hope to publish this on our YouTube channel along with the handouts. So any of y'all that need to drop off or want to listen to it again will have the opportunity to do that, as well as forwarding it to maybe your auditor or your client or what have you if you need to have someone else view this for you. We're going to be covering a host of different things. We're going to talk about general changes to our directives, some COVID-19 accounting and auditing considerations, a list of deficiencies that we've noted in our audits, Yellow Book expectations established with the new directive, reporting requirements, and then agreed upon procedures. We will also be sending out a survey at the end of this to request feedback. We want to be able to provide a very beneficial auditor training opportunity for those that that feel that this is beneficial to them. This training is not designed to cover specific accounting or auditing standards. We are specifically talking about DDSN directives and things centric to DDSN. And I need to, the other point I wanted to make is from the initial training, a couple comments I received were that we need to have a QPL specific auditor training and a DDSN board specific auditor training. I think that was a good recommendation. Again, this being our maiden voyage, we didn't really know what we were getting into, but I think that is an enhancement we'll make going forward. For those that need CPE, I do have to read the CPE statement that is required by South Carolina Department of LLR. It is the responsibility of the licensee to be accountable for the hours earned during the CPE course. The licensee should not engage in any other activities that would denigrate the learning objective of the course to the licensee or to others. If the other activity is unavoidable, then that time should be subtracted from your overall CPE credit. Our overall objectives is to kind of cover these two directives and raise auditor awareness as it relates to DDSN specific topics. I know when I was out in public practice, not having an opportunity like this was really difficult because we had to learn through trial and error and hope we were doing things right versus knowing we were doing things right, because a lot of these things I'm going to go over aren't written down anywhere, and you just have to learn through years of experience. So one thing I need to drill home with everyone is that the DSN boards have to submit Medicaid cost reports to us, and the audited financial statements are the beginning of the cost reporting process. The initial column is tied to the audited financials, and so to the extent our audits are not being done correctly, we're not able to capture costs properly. So it's very, very important that we ensure that everyone knows what to report, how to report it, so that when we move to Medicaid cost reporting, we know what we're getting and we can report it accurately and efficiently. So the significant changes to our directives, I'm just going to hit a few of these. First thing is obviously we added this training opportunity, and we are offering it 2 times right now. We may offer it again in June, depending on, I might ask something about that in the survey when I send it out. Then we'll also offer it again maybe in the October, November time frame for those that are fiscal or calendar year ends of December 31. We do have QPLs that have March 30, June 30. Do we have September 30s and December 31s? So we've got to offer this training, a little bit later also for others. We extended the due date of the financial statements by 30 days. The main reason we did that was to hopefully increase audit quality by giving the auditor and the client more time to prepare their books and to issue a financial statement and allowing adequate review time. I know that was a real problem when I was practicing, and I think that hopefully that'll give folks a little bit of extra time. I do want to note, though, that internal audits can be very reluctant to issue extensions with us already giving an additional 30 days. We are under a lot of duress to get our cost reports done within 120 days of our fiscal year end. So this is the furthest we can go out. And actually that is 120 days after year end. So we are going to require that cost reports still be turned in probably at September 30. But we'll be getting some additional guidance out regarding that. My experience is that the numbers are pretty much final by September 30 or earlier. It's actually generating the audited financial and getting the final product out, which takes so much time once you're back in the office and trying to issue the report. We added Yellow Book as a requirement. I always felt that Yellow Book was implied in the directive, but a lot of auditors didn't see it that way. I think it's important if you're spending public funds that you file a Yellow Book. There's a lot of additional expectations there related to continuing ed, making sure you're actually knowledgeable of government auditing and accounting standards. Peer review requirements are a little bit higher, and independence standards are a lot higher. And so we did implement that, as well as needing reports on compliance with contracts, laws, and regulations, internal control review, and waste and abuse reporting. So all that's coming with the Yellow Book. We also moved a lot of stuff out of the audit side of the directive into the AUP, the agreed upon procedures. I felt those steps really didn't belong in the audited financial side, and were more specific procedures, and the fact that we weren't getting any reporting on it, and the quality of the audits we're seeing, as well as the questions we're getting, and other things that internal audit sees when they go out, it appeared that a lot of auditors weren't actually doing those tasks, although they've been in the directive for quite some time. So we've moved it over to the AUP. There's been, in my opinion, very little, if anything, added to the AUP. It's just being very clear as to what we expect versus expecting auditors and clients to interpret what we want. Also, we had too much diversity in practice with what we were getting, since we didn't have specific expectations established. And also, since internal audit is being challenged to look more internal to our own organization, they are going to be doing follow-up audits with providers, and also doing audits that are generated based off complaints or other special needs that we may have. And Kevin, kick in here if you want to comment. And so they're being turned inward mainly, and so we've got to make sure that our auditors out there are doing what we need them to do. You want to comment on that at all, Kevin?
No, just
Okay.
exactly what Chris said. You know, we're still going to be following up. If we did an audit, we'll still come out to do follow-up audit. We're still available if a provider board of directors calls and asks us for some assistance, but most of our efforts are going to be turned inward, looking at DDSN and DDSN operations.
And we added a requirement that the CFO or myself approve any implementation of accounting standards. That is very important, because when I'm trying to prepare a cost report, I don't need 3 different versions of audited costs being turned in. For example, the fiduciary activities and the leases standard that are coming, if somebody early implemented that, I would have some providers that I'd have to address what they reported in one manner, and others I wouldn't. So it just makes it really, really difficult when we have providers deciding when they want to early implement. So we need to have an inventory of who's doing that, so that we can easily control the end product, which is our cost reports. We also refined the supplementary schedules to make them more easy, in my opinion, easier to utilize. We did away with the designated admin specific schedule. Instead of having a schedule of revenues and a schedule of expenditures or expenses, we've combined those, so that you actually have a profit loss looking report, which a lot of providers weren't, several providers didn't have that in their reports, so you really couldn't see the departmental results. And we removed the requirement to put your cost allocation and all the details of the cost allocation in there. That information just is not useful. So we have the cost allocation as part of the cost report when that's turned in, and that's really all we need. And then the supplementary schedules, we did add a couple, and I'll get into those a little bit. But you know, basically the client should be able to do the vast majority of this, and has been doing it already. So we're asking that this be added to the report to help us with compliance as well as cost settling. So we have a host of different people reporting in different ways, and instead of forcing folks to report in a certain manner, the special grant reconciliation allows us to get what we need without dictating how that's reported in your programs. Some specific things related to what we're going through right now. So on the GASB side, or if you're reporting under governmental accounting standards, some governments may have received a PPP or EIDL loan or EID loan, and there may be other types of things that they've tapped into related to this COVID-19. You just need to identify that and make sure that we handle that properly. And so there are, I guess, the profession is dealing with how all this needs to be reported properly, and even audit requirements are being developed right now. So if you're an auditor, you really need to be aware that there's going to be some nuance here if you have a client that's received or is impacted by these funding opportunities. There are also, we have challenged the providers to provide day services within their residential programs. Most, if not all, are doing so. The issue is we need to make sure that those costs related to those activities are captured as day program cost and not residential cost. Just because it's in the home does not make it a residential program or ResHab. It's still a day-hab activity, and those costs need to be captured or journal entered into the day program. So that's very unique. Also the handling of the payroll deferral and payroll credits, if anyone's using those in regards to deferrals of payments and or claiming of tax credits for emergency family sick leave or EFMLA. There are also going concern considerations that you need to have if your client is impacted detrimentally by what we're going through. You need to consider those changes when we're looking at going concern. And then your MDA should have some wording in there in regards to what you're going through related to these day program closures and other changes that you're going to see coming out. For example, it's fully expected. We can't really commit to a date as to when we're going to convert, but we intend to convert Band B and I to fee for service, hopefully by July 1, but if not then, sometime in the first part of the fiscal year, that being July to December. The commission has tasked us with that in our meeting last week. They wanted us to really move forward there. So there's a lot of analysis and things we need to do, but you need to consider that when looking at cash flow as well as revenue. And I would expect the MDA, to kind of be impacted by that. On a FASB side, if you're a nonprofit or a for-profit, you have similar issues. The problem with the PPP and EIDL is under FASB, they don't really, for-profits don't normally get grants like that from the government, so you may have to use the internal accounting standards, which is the IAS that's referenced there, because there's no GAAP, US GAAP to address this, but there are various, if you Google this, you can find various papers out there talking about the different international accounting standards that you might want to look at.
Screen went blank.
Did it?
Yeah, mine did.
I don't know why my screen keeps going blank. Give me 1 second. It's not blank on my side. So you have the same considerations related to the tax deferrals and the going concern, and also subsequent events. We're back up, right?
Process.
I'm seeing your PowerPoint. I mean, your application. Okay, now.
Very good.
Really, the main unique thing here is, like I said, we have different QPLs with different year ends, and so some of this may actually be subsequent events disclosures that need to be considered because of the timing of the year end. So that's a unique issue related to FASB. From an auditing perspective, there has been some guidance that just came out just recently, last week. It has stated that the PPP loans will not be subject to single audit, so they are not considered federal awards. The SBA, though, will be doing audits of any loan over $2 million for the PPP loans. So you need to consider that when you're doing your audit, because you have to consider whether this is a grant or a loan and what's forgivable and the timing of that being forgiven as far as revenue recognition, contingent liabilities, and so forth. The EIDL, though, is considered a direct loan program from SBA and therefore is subject to uniform guidance, single audit requirements. So if your client has received any of these funds, you need to make sure you treat them properly. The problem is we still don't have a CFDA number, I don't think. I haven't looked today, but CFDA number as well as a compliance supplement. So a lot of folks audit this stuff during interim, which is this time of year, but yet there's no guidance. So you might have to actually do some of this work when you return to do your year-end work. Our first attendance participation to fill into your survey is the color red. If you will fill that into the survey or jot it down, and you can complete the survey at the end of this training if you want. And I will drop that CPE link in again a little bit later, so if you signed in after I drop that link in, we'll drop it in later. Just go ahead and write it down for now as far as the participation proof. All right, this is just a sampling of the different issues I've noted in our audit since I've been here, and it's not an all-inclusive list, and I am going to fly through these. This is not geared towards training people on the proper way to do this. It's more highlighting these issues so that you can then explore these issues with your auditor or your client, and or inquire with internal audit or our finance department. Some folks are using enterprise accounting, which is not appropriate. Enterprise accounting is where it's a for-profit effort inside of a government where the user fees are designed to cover cost, similar to like a wastewater, somebody that picks up garbage or has a library system or different things of that nature where the user fees are designed to cover the expenses. Just because we fund individuals based on a band, that is not their money to spend however they want. If they leave us, they don't get to take it with them, so it's not their money. It's just the manner in which we compute the funding. So enterprise accounting is not appropriate. We have, I think, several folks missing component units and subsidiaries that should be consolidated. If you'll please review that when we go through it. Those that attended the Galasso training last week, you probably need to review those flow charts and make sure you're capturing them properly. It could be that I'm just wrong there. I'm just thinking, based on my limited knowledge, that we might have some issues. I've got folks putting their blended component units right into the capitated program schedule. That's not appropriate. They shouldn't be in there. If it's a HUD project, for example, that is not a capitated program. It's a separate legal entity and should be in a consolidation schedule and in a consolidated presentation, not inside the capitated. We're not going to take, the issue is when we settle capitated programs, we shouldn't be taking HUD revenues or giving credit for expenses that are incurred in the HUD entity. That's not how the capitated program is settled. A lot of supplementary schedules are not following the required format. And what I mean there is the attachment to the directive. We have outlined the lines that we need. Again, consistency is very key here. If we have providers doing whatever they want, using whatever lines they want in whatever format, we have a really hard time dissecting and interpreting what we're receiving. We have folks combining a variety of residential programs and waiver programs into a single column. They may have 2 or 3 houses in one column or all the waiver programs in one column. We need that broken out because we have to be able to tie that stuff to our cost reports. So those should be separated. We have incorrect reporting of DDSN revenues as it relates to the different rows we want on the audit, so we can identify, if you just combine a bunch of different contract stuff into one line item, we can't tease it apart to reconcile back to our grants. So we have all that done by design so that we can easily interpret what's being reported and spot things that we might need to address. Credit reports, some folks are still netting that against program revenue. That is a contra revenue. It is proper in the revenue section, but should be readily identifiable as a separate line item. We have folks that are not reporting special grants, or we can see them. They might be rolled up inside of another line with other capitated revenues or non-capitated revenues. We have some boards accruing waiver credit reports. Those are cash basis. Those should not be accrued. I'm going to dig down into some of these in a little bit. So if I'm flying over some of these I am going to dig into at a little bit deeper level. Some folks are spreading their waiver credit reports to their residential programs. That's not correct. These are waiver costs, not residential costs. ResHab is its own program. ResHab does not include waiver costs. Waiver costs go in the waiver program, even as for residential folks. We have folks allocating day program cost to waiver. Again, DayHab is DayHab, waiver is waiver. So we should not have day program costs allocated to our waiver columns in our back schedules. Care and maintenance for ICFs, I'll go over that in a little bit, is not being reported properly. We have cost allocation issues where folks aren't allocating cost properly, either by allocating things that shouldn't be allocated or not having enough cost pools or what have you. Many folks are not recording paybacks to DDSN, which should be a liability that folks should be identifying and recording for the variety of paybacks we have. Again, I'm going to dig into that in a little bit. And depreciation, useful lives, and methods are incorrect based on depreciation schedules that I'm getting with cost reports that tie to the audit, and they're not using the proper lives or methods, which you can do that, but you need to adjust. So I'm going to go over that in a minute also and dig into that a little bit more. So we're going to go over a little general information about our directives. First thing I'd like to mention is that we're trying to build out an auditor repository where we dump a lot of stuff in there for auditors to access, like our directives, our finance manual, standards, memos, and other tools that would be useful for auditors, as well as our provider network. Hopefully we'll have that. We've been building it already, but we don't want to push it out yet because it doesn't contain what we want, and it's not in its final resting place, so I don't want to send people to where it is now and then it end up getting moved. But as far as our directives, I'm not going to cover 27506. That's going to be done by Kevin in a minute. 27504, I'm not going to sit here and read this, but basically the main thing I want to highlight is that auditors are required to send in a statement saying they complied with the audit directive, and we found that auditors aren't complying with the audit directive based on our review of the audits, as well as talking to the providers, as well as internal audit engagements. It was clear that not all auditors were doing what they were supposed to do. So that's a real issue, and so by moving this to the agreed upon procedures, you might start getting a lot of questions from your auditors you've never heard before, but realize those have always been in there for years. And also, you're required to identify those threats to independence. Yellow Book, government generally accepted government auditing standards, or GAGAS, is really cracking down on independence. We need to make sure that our auditors are really considering all the different things they're doing for their clients and how they're overcoming those threats. They're getting more and more concerned with preparation of financials, for example. So there are some very unique things that were added to the Yellow Book this year, which I'm going to hit in a minute, that address that. Also, just a few things. The audit reports are due within 120 days of year end. I'm going to let Kevin go over the agreed upon procedure stuff that's here. Corrective action plans are due within 20 days of issuance of the findings. CFO must approve early implementation of accounting standards. Extensions are available through Kevin's shop to the Director of Internal Audit for audit reports and AUPs. Contract reductions, as always, are out there if you have some late filing, and you have a 5 business day grace period between the due date and when the penalties start to kick in. Again, that's not new. That's been in there. All right. So the main thing I want to point out on this slide is that the financial statement is the foundation for our cost reports. And in looking at cost reports since I've been here, we have a host of issues, not only from the audit report, but also in the cost report. So we need to work on what we're asking folks to turn in and do some training on cost reports as well. Hopefully we'll get that done between now and maybe July. And I've got to develop it from scratch, so that's just something I got to figure out how to do. There is a requirement that you do a schedule in the audit supplementary schedules if you have variances between your audited financials and your cost reports. Now, keep in mind that's only if the audited financial statement expenses don't match the audited financial statement expenses in the cost report. That's the only time you're doing that. We're not asking you to outline every single journal entry that you're doing on the cost report itself. It's just to identify any variation between what's in the audit and what's in the cost report. Because if you have $1 million in your audit, but then we pull the Medicaid cost report and it says the audited financial statements have $1,020,000, we don't know what the $20,000 difference is. So we need to be able to identify that. Also, when we do get around to cost report training, there are a variety of things that you need to think about in regards to adjusting your cost reports. The cost allocations, if you don't follow Medicaid cost principles in your cost allocation, you're going to end up doing an adjustment to your cost allocation in your cost report. And I will go over some examples of that later. I think most people are probably going to have to do that now because we are not allowed to claim other post-employment benefits or pension liabilities. So if you're recording that on your audit, which you should be, some of that will be in your expenses, either in your programs or in your intermediate cost pools. And so the fact that that exists in your numbers, and then you go and do your allocation for your financials, including that information, now when you turn around and go and report your allocated cost in your cost reports, you're allocating, for example, administration and day program and so forth that includes those costs that are not allowable. So you have to do an adjustment. And again, we will do some training or send out some guidelines on what I'm talking about there, because I know a lot of folks haven't had to do that. And I would recommend, if you identify non-allowable costs, that you go ahead and report those in a general fund or some other cost pool so that it doesn't get mixed in with your program costs that go in your audit report. That way they're readily identifiable and you can show that you didn't use DSN's money for that. Any questions from y'all? Kevin, Brian? I know I'm going fast. All right, pointers that we need to make. How are we on time? 15 minutes?
Yeah.
All right, pointers just to make. These are just some kind of drilling down into what I was just going over in a little bit more detail. Miscellaneous reporting considerations. Make sure that you got all your supplementary schedules properly separated. There's been a little bit lack of specific guidance there, but you should have your back schedules, if you will, broken down in these types of schedules so that we can have the information we need in the format we need it, and we don't have to do a lot of work to make adjustments here. It's making it very, very hard for us to do cost settlements or analyses or anything really, the fact that we don't have a lot of consistency. Again, multiple programs, for example, 2 ICFs are added into a single column. Providers really need to separate that on their financials, on their internal accounting, because they really need to know how they're doing in each of those homes anyways. When it comes to outliers and different things and analyzing operations, to have multiple homes in one cost pool, and I know several of you are still doing this, it is not really advisable, and we need it broken out anyways. If you just divide it by 2 on the audit, I mean, we can take that, but that's really not what we desire. When homes are converting from ICF to CRCF or CTH2, we need to make sure that a new cost pool is started. I don't think that's always done, but we need to make sure that when that license changed, you need to look at the payroll and other costs to make sure it's properly allocated between the two different facilities, pre and post conversion, as well as updating cost allocation statistics to ensure that that also is properly reflective of the conversion.
Screenplay.
Really? Why is it doing that?
Maybe the recording is causing it to do that.
All right, and are we back? Waiver? Why is that box still showing? I don't get it. I don't have that up.
Application?
It's not showing on my side like that.
Okay, back up.
Okay, and then, we have some folks throwing all their waiver into one column called waiver programs. We need those separated. There's an IDRD, CS, and HASCII waiver programs that all need to be separated. And we have 3 cost reports for that. We have to tie that out to the audit, and we're unable to do that right now. And they're all settled individually. So if you put some stuff in HASCII, but it should have been in CS waiver, and then I go and report, I can't validate what you're putting on the cost report because the audit doesn't have it broken out. So now when I go to file the CS waiver cost report and I'm claiming HASCII costs in there accidentally, I can't even tell. So right now I just got to cross my fingers and making sure that that's happening properly. I don't like crossing my fingers, especially when I have to sign under penalties of perjury and being thrown in jail.
Right, like a little more.
Room and board computation. The providers have been doing this for years. I really don't see this as a big, heavy lift for auditors. The reason we want it in the audit is because, number one, we will have it with the audit, and we don't have to wait for the client to generate this to us. When we receive your financials, we can immediately go straight to reviewing room and board. It also helps you in the following year because you know the room and board calculation. You don't have to go ask for it or inquire about it. It's right there. So assuming we approve what's in the audit, then that's going to speed everything up for everybody. It also allows us to get the granular information we need. The current directive needs to be revised. It says in it that the room and board calculation must tie to the audit report. The problem is with the audit report, we don't have enough granular information in regards to particular line items. Just to give you a few examples, we have a telephone line. Well, that can be landline or cell phone or internet. It can have a variety of things in there. Some are room and board, some aren't. Insurance property. Well, that could be facility and it could be vehicles. It could be other items of property. Depreciation. It's not broken down by facility, land improvements, building improvements, and so forth. It's just depreciation. Interest expense. We have one interest expense line item. So there's a lot of these examples. I can go on and on. There's more than that. So by asking the auditor to get involved, we really want the trial balance level detail in this calculation, not the financial statement line item level. And so the auditor is involved just because we need to make sure your audited trial balance is what they're actually using in that schedule. So that's the main reason we have that there. Like I said, the directive basically puts us in a position where we're approving it room and board right now that's actually incorrect, and I have been able to verify that just because we don't have the level of detail we need. We don't need that light because nobody can see us anyways, right? We can see. All right, we're in the dark here.
I'd say that might be better for
Special grant schedule. Again, it's very, very hard. I've been trying to get cost settlements done since I've been here, and every time we go back and start working on them, we just get frustrated because we can't find the detail we need. If we find the revenue, we don't know where the expense is or how to pull it out because it's all inside all the other expenses. So we're handcuffed. We don't have the ability to do our jobs. And so we want to have a special grant schedule. Providers should be keeping up with that anyways because they need to know whether they owe us money or not and should be tracking that in their accounting records anyways because they all have a 100% spending requirement in them. The confirmations that we're sent out, the auditor confirmations, we do hope to make those better this year. They are very, very hard to use from an auditor perspective. I have found that I could only tie it in total and not really find it useful at all otherwise. So we're going to try and get something out this year that actually is helpful and allows the auditor to easily tie that in. The next attendance is white, the color white. The reconciliation I was talking about earlier about the cost reports that's in the directive, most of y'all won't have to do this. This has been in the directive probably 25 years because I know I was doing it when I got out of college, so this is nothing new. So again, it's just simply you explaining the audit if it doesn't tie out to the cost reports. That could be an issue if we start making the cost reports turned into us within 90 days, but the audit's turned in 120. We could see some variances pop up where the cost reports were turned in and something was found and y'all had to change something. Then the schedule comes into play because y'all made a change after the cost report was done and we need to know what it is so we can make a manual adjustment. Pretty much already went over all this other stuff. The schedules that we ask you to do in the back, the supplementary schedules, we do have those available in Word and Excel. They are on Business Tools under Forms and Directives 200 series, and then you just find the directive number. So if the client, most of the providers have access to this, and you can get that from them, or you can ask us for it if need be. Capital assets. So under GAAP, you're allowed to utilize industry standards and some basis as it relates to coming up with useful lives and your methods. The issue is, for GAAP purposes, it's fine if you want to report capital assets and depreciation the way that you're doing it. The problem is when it comes to Medicaid cost reporting, you're now going to have to keep two sets of depreciation, kind of like AMT and ACE, or book versus tax, which you can do, but that's an extra cost. That's an extra adjustment you need to make on your cost reports, and it's going to affect your cost allocations. So if you're using the wrong method or the wrong life for vehicles, for example, you would have to fix your cost reports to use the actual correct life and method. So what does Medicaid require? Medicaid requires that you use the AHA Estimated Useful Lives for Depreciable Hospital Assets manual. It's updated frequently. You can buy it on Amazon or Google it. It's like 60 or 80 bucks, and it has all the lives in there. That's what we're supposed to be using. Straight line method should be used, and half a year convention for a year placed in service and disposal is what Medicaid requires. So that if you're not going to implement those at the provider level for GAAP, then you have to make these adjustments and have two depreciation schedules that you're tracking. Also, I'm seeing when people are buying homes, they're not breaking land out. So if I buy a $180,000 home, they're depreciating the whole home. Land, if it's $30,000, should not be depreciated. It's not a depreciable asset. So you should take the appraisal and come up with a method to break that land out. All appraisals include a land value, and every house that's purchased has to be appraised for either us or the bank. So you should have access to appraisals to break that out properly. So when I go through, the vast majority of people are not doing that. So as a result, we're overclaiming our depreciation. Are we still up?
Stopping at 10? What time?
9:55. All right. Also, and we started 5 minutes late, so I might have to. The settlements I was mentioning earlier, these are the ones that I'm not seeing a lot of. Some providers are doing it, so others aren't. If you're not going to book the liability because you question whether it's going to be owed or not, then you should at least have a contingent liability disclosure where you're addressing that and estimating that. Under the waiver direct billed credit reports, again, these are cash basis. They're 3 months behind, so you should not be going out and grabbing cost report, credit reports that we take in July, August, and September and pulling them back in June because they're for April, May, and June. Those belong actually in the months that they are taken from. We only recoup for IDRD and CS waiver programs. You will not find anything like that for Haskell. These should not be reported in expenses. They should be a contra revenue. Medicare Part D should be a contra revenue as well and should not be accrued, and it's only available for the IDRD waiver program. Respite recoupment, if you are using Charles Lee or Jasper, one of the regional payroll agents, we need to make sure that you're accruing the respite payroll for the underlying payroll. A lot of folks aren't doing that, so if we're recouping, we're 2 or 3 months behind, you should be getting that information from those payroll entities or off our portal and accruing those back into June. These amounts should be included in expenses under contractual services as outlined, and you should not use these to allocate cost to because all the effort done is at Charles Lee and Jasper. We pay them for admin, and you do not get to claim admin on top of their admin based on how much that costs. Bed fees, some folks are reporting that an expense. That is a reduction in the revenue for ICFs, so you should not be recording that in expense. We record that on our side. Care and maintenance should be based off the actual amount in our contract. We do a cost settlement, so if client fees for ICFs are $100,000 and the board received $120,000, you have a $120,000 liability, and that should be reflected in your payables or due to DDSN. Similarly, if you only got $80,000, we would owe you $20,000. So folks are not doing that properly either. And the July payment is for June, so you should have a receivable from us for the regional centers for the care and maintenance at year end. I'm not going to be able to hit all these others here. You can read those. The main issue would be on SNAP benefits. This is something that I know not everybody's implemented statewide, but that is unearned income that should be benefits and should be part of room and board revenue. And food costs should be shown gross, inclusive of the SNAP that was redeemed. I'm not going to hit the adult day program. We kind of already talked about all this. The only thing is on the right-hand side, you don't have to do this for the financials to reduce all your vehicle costs, but you do for the cost reports. So why not just do it that way for the audit as well? All the ICFs own their own vehicles. Now, if that's not true, then disregard this. But ICFs own their own vehicles. They provide their own gas. They provide their own drivers and everything. So you can't allocate people picking people up from home to the ICF. So you have to back out all those costs out of your day program before you allocate. I'm going to talk about intermediate cost centers later under the AUP when we get around to it. Our last attendance for me is blue, so you have red, white, and blue. For those that weren't there, I just gave you a cheat, and Angela's going to write me up. Reporting requirements. Yellow Book, there is a new Yellow Book that's effective for June 30, 2020, so folks need to make sure they implement that, but they do not have to do that for the Row app. That is not required to be done under Yellow Book. I didn't feel that that really was necessary when I looked at that. The main issue we have is under indicators of management's ability to effectively oversee the non-audit services. The client should be able to spot material errors, omissions, or misstatements as a result of your non-audit services. So If they're not catching that you're using the wrong useful lives or that you haven't implemented 68 or 87 or 84 GASBs properly, or they don't know how to implement the leases standard properly, if complete with disclosures, and spot that you missed something or did something wrong, then I would have to question where they have the level of knowledge they need to do that. So you need to just plug in to those requirements. And then, of course, waste and abuse is a requirement. If you run across it, you're required to report it in your Yellow Book audit report. These are the actual deliverables. They're in a table. I'm not going to go over it, and that's for your future reference. And then I don't know that we have time for questions. We have a 10-minute break right now. For those of y'all that do not want to go to break, you're free to stay and ask a few questions. Otherwise, we'll go to our 10-minute break. I'll give you a few minutes, and then we'll hear from Kevin when we get back. All right, so if you look at the little monitor at the bottom of your screen, it should have a little monitor with the arrow in it. If you hit that, it should say something about attachments or manage attachments or access attachments or something. And you should be able to pull
Manage attachments.
you should be able to pull it from there. If not, let me know. And I'm going to add the CPE link back in again for those that weren't here when we started. I don't think you can see that, so. All right, we're at break, and if you still have questions, go ahead. I'll be here. I'm not going anywhere.
All right, good morning, everybody. This is Kevin Jacoby, DDSN Internal Audit. We're going to go ahead and get started so we can let y'all get to your day. Hope everybody is staying safe and healthy out there. So we're going to be talking about the report on applying agreed upon procedures, or the ROAP, which is what you'll generally hear me refer it to. Step through the procedures that are required, and then try to reference in there. It's in the handouts, but whether it's applicable to DSN boards or privates or both. Some of the things we're going to be covering are the due dates, the required content in the ROAPs, any amendments that need to be made or corrective action plans if applicable, and then extensions and contract reductions, again, if applicable. So this year and this year only, as any good marketing enterprise, we are offering you a one-time deal, and that is where you can change the time period for your ROAP. So in the past, we have had the ROAP and the financials that we're due on the same time. So to sort of help potentially level out your workflow, this fiscal year you have the option of changing your reporting period for your ROAP. If you choose to do that, you need to let DDSN know, and that's via letter to Chris, and on letterhead signed by the president, CEO. That needs to be submitted by July 31st of 2020. It needs to state what your period is, your testing period for your ROAP is going to be. It cannot extend past the 18 months. So an example is if you had a ending period for your ROAP that was, say, June 30th, and typically that would be due here within 90 days. But if you wanted to extend that, say, to this year, if you want to extend that to 18 months to the December 31st, you could do that. You would just need to let us know that in writing. And then once you make that commitment, it stays that way, right? So this is, again, a one-time deal.
You would stay on the calendar year at that point.
Right. The deadlines are not going to, for when it's due, is not going to change, which is still 90 days past whatever period you pick. So if you stay with the state fiscal year of June, then it's going to be due here the end of September. If you move it to December, it's going to be due the end of March. Or anything in between, same thing with the 90 days. All right, who is required to have a ROAP? So any DDSN board, QPL, that receives $250,000 in DDSN revenue, then you're required to have a ROAP. That includes any kind of sub-guarantee that is funded with DDSN funds as well. There is a caveat here, and it is going to affect some of you on the call. So if you are an EI provider, it is going to be looking at DDSN revenue and HHS revenue through the BabyNet program. Okay, and we'll talk about that a little bit later. Again, it's going to be due to DDSN internal audit within 3 months of whatever period you select for your testing. It's done annually. Do make sure, in terms of samples, that your auditor is following the ACPA guideline, AUC 530. We need to make sure that the sampling that we're getting is representative of the audit population. And then reports must be completed and submitted by a CPA firm. First polling question: have you completed a ROAP report for a previous year? A, yes, more than 3. B, at least 1 but not 3. And then C, haven't completed a ROAP, because we do have some boards and some Qs on here, so that wouldn't be applicable to y'all. This is mainly for the CPAs. All right, moving on. So what are the required procedures? And we'll get into all of each one of these a little more specifically. But for both boards and QPLs, you're going to be testing for Medicaid billings. The reason we do this is DDSN, again, with the exception of EI and some case management, but the other services are billed through DDSN's Medicaid number.
I don't know what's going on. We have a delay between when we change a slide and,
It's up now.
okay. And when you get it, for some reason.
Yep.
So apologize for that delay. Hopefully you have the handouts in front of you too.
Right, and that's what I was about to say. I'm hoping you have the handouts as well,
Is
because
the screen going to come back? There it goes.
the first time we had it sort of flicker out for a few times. So just to keep this thing rolling, if it flickers out, we're going to work on it on our end to get it back up, but I'm going to keep moving through the notes just so we can get through everything. So we were talking about Medicaid billings. With the exceptions that I mentioned, your Medicaid billings are billed under DDSN's Medicaid number. So we need to make sure that there's documentation there to support that service. So that's why we have that procedure in place. Second one, management of consumer funds and property in accordance with DDSN directives. This is for DSN boards and QPLs that run residential programs. Next thing we're going to be talking about is making sure that all direct care staff are paid the minimum hourly wage as we speak. That's $13 an hour. Again, this is going to be DSN boards and QPLs. There's a little caveat to that we'll talk about when we get to it. They're going to be testing room and board, see if it's been implemented according to DDSN policy. Again, this is DSN boards and Qs that have residential programs. Costs charged to intermediate cost tenants are adopted in accordance with DDSN directives, DDSN boards only. The next two are also DDSN boards only, and that is compliance with the procurement directives, and lastly, determine if financial transactions by the ED and top administrative staff are proper. All right, first one, Medicaid billings. So audit procedures, best practices, sample findings, that's sort of going to be the layout for each one of these processes that we step through. For audit procedures, gain an understanding of the Medicaid billing process and controls over billable services. There are several ways to do this. You, of course, are going to talk to staff, board or QPL staff, each one over their respective program. There's a wealth of information on the DDSN website in terms of directives, standards for each program, Medicaid manual, the waiver manual. You're going to perform sufficient work to make sure that the policies and procedures are adequate to provide assurances that services are properly supported, i.e., is there documentation there that supports the billing? Is there some type of monitorship going on by the organization that supports that they're following up to make sure the service is being received? You have to check, you have to test each Medicaid program. So anything that they bill Medicaid for, respite, day program, residential, you need to check all those programs and have a representative sample from each of those programs to test it. Your test should determine that supporting documentation is complete and accurate and on file and in the file to support the service, and then understand and test monitorship. And again, with the monitorship, this is what are the internal procedures that the organization has to monitor and ensure service delivery. Now with EI, that's laid out in the standards. You have to contact at least 2 families per month per EI. You have to go on at least 1 quarterly visit per EI. But with other programs, it's what internal procedures has the organization developed to monitor. Some of the sample findings that we've had in the past, and again, these are just sample findings. I will mention this for anybody out there, the CPAs or the boards or the Qs. Each year, internal audit does a summary of findings. We do that both for internal audit findings and for external audit findings that are pulled directly from the ROAP and the financials. Ask your client for a copy of those if you want to see some examples of some of the findings we have had in the past. If you can't get one from the client, if you'll contact us, we'll be happy to provide you with a copy.
We plan to put it in our repository as well.
Absolutely, yep. We talked about that last time. So the repository that Chris was talking about, that's going to be sort of a reference toolbox for auditors, we'll put a copy of it out there as well. So again, these certainly are not all inclusive, just some sample findings. 5 consumers were marked present in the day roll book. Their app had no activity noted for documentation, so there was no documentation to support the service was provided. 1 consumer was routinely marked present for units, but did not meet the hourly requirement. So there are hourly requirements for units, like in day program. I think it's 2 hours for 1 unit, I think we lost the screen. We're going to work on that and keep moving. But in the day program, it's 2 hours for one unit, and when you go past the third hour, it's 2 units. You need to make sure that they're meeting those minimum time frames in order to bill. Case management, we noted 2 consumers had over 60 days between case notes. There ought to be a monthly contact there. Service notes indicated a conversation was held between case manager and the consumer at career prep. However, the service did not reflect it as face-to-face. Within case management, you have 2 billing calls. One's over the telephone and one's face-to-face. So you want to make sure that that's being documented and billed correctly. We're going to keep moving. Again, as Chris mentioned, if you have any questions, just type them into the chat box, and we'll try to get them answered for you. All right, continuing in Medicaid billing. Here, if you're anything but an EI provider, you can take a quick 1-minute cat nap. We do have several private EI providers on here, so guys, y'all listen up here. Specifically, this is for DSN boards and all QPLs. Same audit procedures. You're going to see that it moved here to EI, did it not there? All right.
It's taking longer.
Yep. So we're actually on page 2 of Medicaid billings. We're talking about EI for you folks out there
It says the same thing.
in telephone land. All right. So for EI,
Slide 41, right?
yep,
Okay.
we're going to gain an understanding of the Medicaid billing process, perform this work.
We didn't change the, we should be on this.
Yep. Oh, sorry. That was user error. Slide 42, Medicaid billing. Header is for talking about EI billing. This is DSN boards and queues. So audit processes, same thing that we were talking about. Gain an understanding, perform sufficient work. We need a representative sample here. The thing here is we are looking here, nothing changed from last year except for funding source. We are still testing children from birth to 6 years of age here. We have a QA contract with Medicaid that covers BabyNet, and this is part of that contract. So we are not changing our processes this year. So if, again, when I referenced earlier about the $250,000 is a requirement for a ROAP, for private EI providers, that's going to include DDSN revenue and HHS revenue from the BabyNet program. Okay? So what are some of the best practices? Same thing, consult with program staff, look at the EI manual, look at the EI standards. Within this program, for monitorship, as I referenced, there are some specifics in the EI standards. 2 files monthly per EI, 1 quarterly visit per EI. For case management, on the EI side of the house, you're going to make sure service notes are documented and in the file. Look at service notes, family training sheets, ensure that services are being authorized, are being performed as authorized, that they're not going over that authorization for services. And again, sample findings, 1 hour for one consumer was billed. There was no family training sheet on file. We have the same thing where there's service notes and no family training sheet. So you need to make sure all the documentation is there.
Can I make one comment on the Medicaid billing?
Mm-hmm.
We did remove the requirement to contact the family with the auditor and the staff present. We determined that really what we're interested in is making sure that that there's evidence that the services are being provided. I was trying to ensure that the things that we put in this directive were value added and really were worth the effort that we were asking our auditors to put forth. And again, based on personal experience, that effort really never turned up anything. So really what we're looking for is the auditors to really engage and make sure that there's other evidence that these services are being provided. What I found in talking to families is if I had selected February's month to test and I'm calling them, in May, they're not going to remember the services in February. And a lot of families wouldn't even answer the phone or didn't want to talk to anybody. So we did remove that. That should be a time saver. when you papers, it is really, really loud on there. Anyways, there's a give and take. I just want y'all to realize that we did remove that in case you didn't notice that it was taken out.
All right. So moving on again, if y'all have any questions, just type them into the chat box. So next procedure within this is consumer funds, testing of consumer funds. This again is DSN boards and QPLs with residential programs. What are the procedures? You're going to determine that the organization is operating in compliance with Directive 212 DD. That's the DDSN directive for management of funds for consumers. Representative sample of individuals and a representative sample of transactions, because you're also doing some transaction testing to make sure the documentation is there to support the transaction and it was on behalf of the consumer. In this particular area, if you see any kind of misappropriation of funds or any falsification, you need to contact the executive director, CEO of the program, and also let internal audit know immediately. Some of the best practices that you're looking for: we want to make sure that bank accounts are set up to show the fiduciary relationship between the organization and the individual per Social Security guidelines. Bank signature cards are updated with appropriate staff. We do have some turnover in this field, so we want to make sure that those bank signature cards are being updated timely. Bank reconciliations are conducted timely, and they're conducted by an independent party. You don't want somebody who, say if they have a collective account that manages that collective account, that is also doing the bank reconciliations. We want to make sure there's original receipts for purchases, any purchase that was made on behalf of an individual, that cash on hand is reconciled monthly, and it is also done by an independent party, so possibly done by somebody, say, from physical staff, where the residential staff are the ones that assist the individual with handling that cash on hand. We want to make sure that cash on hand is adequately secured. Is it locked securely? You know, I know adequately sometimes can be subjective, but what we don't want to see is when you go to count it, they simply open a desk drawer and it's laying there. That it's secured in a locked desk drawer, in a locked box, or a locked file cabinet. You're testing to make sure that asset limits do not exceed the Medicaid limits. Now that can vary within our population. I would say the vast majority of folks that we serve, it's a $2,000 asset limit. If they are classified as age blind or disabled by Social Security, then that asset limit goes up a little bit. It was $4,000. I'm not sure if it's gone up a little since then or not. But basically, you're looking that asset limits are not exceeded. And then if the provider utilizes a collective account, assure again that it is approved by Social Security and by DDSN. And for any of these, you need to utilize the charts and the templates that are in the Row app. You know, we've tried to make this fairly easy and quick to follow, so we have the template out there, and really it's just a matter of doing your testing and then sort of filling in the information in the appropriate spaces in these charts and in the templates. So some of the sample findings related to consumer funds: 3 of the 250 checks were missing the consumer signature. Sometimes we see it's a staff signature, sometimes it's both. 4 consumers exceeded the Medicaid limit for at least 2 consecutive months. Again, when you run into that asset limit, there are options for our individuals. We now have ABLE accounts, pooled trust accounts. Does the consumer have a pre-need burial account? So there are tools in the toolbox to assist with getting that reduced where it still benefits the individual. Other sample findings: 9 checks for 3 consumers did not contain the required signature. The cash on hand monitoring is not being performed. A copy of the bank signature card is not on file in the consumer's permanent file. 8 bank statements were not reconciled within 20 days, which is the mandate in the directive. And again, we'll be putting the summary of audit findings, both externally and internally, in the audit repository to give you some additional ideas.
Can you address if their board policy has not been updated, whether they audit to our directive or the board's policy?
Yes. So what we tell the auditors to do and what we do when we're doing audits, boards can choose to be more restrictive, but not less restrictive. So,
Because that 20-day thing, I think there's still some providers out there that may have 10 days or something in their policy.
right. So if a board or the organization or the QPL has a policy that is more restrictive, then you audit by that. If they have not, now we have had, for example, cash on hand, you're not specifically testing for this, but that's one we see. No, let me go to personal property. We updated that personal property. It doesn't have to be recorded on the personal property directive unless it's $100 or more. We did that in November of 17, November 1st of 17. Some providers have chosen, prior to that it was $50. Some providers have chosen to keep that at $50. That may be simply because they have not updated their policy to be in compliance with ours. Some of them, it was a conscious decision. They wanted that to keep it at that $50 for control purposes. You need to audit by the board's policy and possibly point out that that policy may be different than what the DDSN directive, and then let them know if they need to update their internal policy.
One other comment I forgot to mention in my section that's pertinent here. We also removed the requirement that you do all the disclosures in the audit report itself in regards to consumer funds. You can remove all that if you want. I mean, you can leave it in there if you want to. We've asked that that be added to the ROAP because some folks weren't doing audits and we weren't getting that information. And we also, again, we're getting such a variety of information turned in. So if you have a bunch of stuff in your note disclosures, you're free to take that out now and add it to the ROAP if you want, or leave it, whichever.
All right, so moving on. Next thing that we're testing for is personal property. That's why I used that example that we just gave. So the audit procedure that the CPA is looking at is to determine if DSN boards or Qs that have residential programs, that their policies and procedures are in compliance with DDSN Directive 60401DD. That's our personal property directive. Best practices, again, as I mentioned, November 1st, 17, it went up to $100 to be mandated to be recorded on the personal property record. So you're going to look for that. So when you're doing in terms of when you're doing your transaction test, if you see a purchase where any single item was $100 or more, or possibly $50, depending on the providers, what their policy says, then you want to check and make sure that that item is recorded on the personal property record for that consumer for the date or very close to the date of the transaction. Sample findings that we've had, consumer had an item that was, in this case, $50 because that was provider policy. It was in their room, not on their personal property record. Personal property records did not include adequate descriptions to include serial numbers where applicable. That is stated in the directive that if it has a serial number, it needs to be recorded. And that additions are added to the personal property record timely, which is what we were talking about when you're doing your transaction testing. If you see something that has a cost of $100 or more, that it's added.
And at this time, we are not requesting that auditors go out to the homes and validate the actual inventory. That could change in the future. We need to see kind of what happens with Kevin and his team not going out and doing this stuff, and also kind of what response, what am I trying to say, results
Right.
we get.
What we're seeing, what gets reported, that kind of thing. So right now, really, it's when you're doing your transaction testing, tracking that over to make sure that it gets on the personal property record if it was a purchase that would need to be recorded. All right, moving on. Direct care staff, minimum pay. Again, this is for boards and any Qs that have residential programs.
Or day programs, I forgot that. We have a few QPLs that do day program.
Very good point. We do have a few QPLs that have day program. That would be direct care staff working with consumers. So if you run I don't think we have any on this list today from looking at it, but if you had a day program then this would also apply to you. As I stated earlier, right now, the minimum direct care pay is $13 an hour, subject to change, depending on if we get funding, so you need to check and make sure what that is each respective year. So you're going to be testing for the minimum pay rate. Assure the timing of the pay rate is effective the first pay date in July. And here I mentioned when we were doing this introduction to the steps that there was a little caveat. So here, if the direct care staff person is paid less than $13 an hour, it cannot exceed 90 days or where there's a written exception by DDSN. So an example may be where they hire staff, and while they're doing their training, it may be less than 30 days. But that cannot exceed 90 days, or again, if the provider has a policy that's more restrictive and says 30 days, whatever their policy would be. So that's what you're looking for in this. Best practices, again, these are just ideas under best practices. If you have a methodology that works for you that meets that meets the audit procedure, then that's fine. Here we're saying review a minimum 2 pay periods to test the rate. Some of the sample findings: direct care staff one was not paid the established minimum salary or hourly wage in accordance with the DDSN contract. Vocational trainers were not considered as direct care staff and did not get the mandated increase. Tying back into what Chris said in terms of you do need to be looking at day program folks as well here. All right, room and board. This is again going to be DSN boards and queues that have residential programs, the audit procedures, determine that the organization has a room and board policy for fees that have been reviewed by their board of directors as well as by DDSN. I think we lost the screen. We're going to keep moving along here, so y'all stay caught up with us. So again, the CPA is going to get documentation of the DDSN approved rate and ensure that that was the rate that was utilized during the fiscal year. We have had some instances in the past where there have been increases by the provider. It wasn't submitted to us. The directive says that until such a room and board rate is approved, you have to continue to charge the old rate. So we had some paybacks in those situations. We want to make sure that's not happening. The CPA is going to familiarize themselves with the policy and the approved room and board rates in terms of testing, review actual charges, make sure that they comply with the policy and do not exceed the approved room and board rate. And then when you're doing your testing, you're going to sample move-in and move-outs, make sure that those are pro rata proper. So if somebody moved out on the 15th, that it's done proportionally, they're only charged for half the month. Sample findings, room and board policy for consumer fees were reviewed and approved by the board, but they were not sent in to DDSN for approval. Room and board payments, as I mentioned earlier, exceeded the approved room and board fees. Here, room and board fees being paid in advance. What we're not talking about is, you paid on August 30th for September. We're talking about where providers have used this to try to reduce resources, and they have paid like 3 and 4 months of room and board up front to try to reduce asset limits. That's not allowed. And then improper calculation of room and board for partial months.
We got a room and board question.
All right.
Will we still get notifications of approved room and board rates since it's now part of the audit instead of a separate process?
Yes, we still have to review it and make sure that it's done properly. Just because it's in the audit doesn't mean that we won't have issues with its calculation. So yes, most certainly. It'll just accelerate everything, make everything consistent, and drive quality through that entire process. I think the first year, it may be a little time consuming, but after that, I think, once you get your processes updated, it's going to be fairly easy to maintain going forward. Cost allocations, you don't have to move though.
Okay.
If you'll do the screen.
Yep.
All right, so cost allocations. again, this is already in the directive. We just wanted to, basically, it was so nebulous previously that we got a wide variety of results from auditors, things that obviously weren't being done at all based on some of the things we've seen. So again, if you go back to older directives, you'll see the cost allocation wording in there. And what I did is I tried to give it specificity in what we're asking for. And the main thing, the overarching goal here is to ensure that the administrative cost pool doesn't become a dumping ground for just about anything and everything just because they're trying to simplify coding. So you're really needing to look at your administrative cost pool. Just this year, I've reviewed several as we've done other projects, and folks have maintenance men in there. They have their residential directors in there. They have their CTH coordinators in there. They have a residential secretary in there. What you need to ask yourself is, why would early intervention be charged for a maintenance man? Why would they be charged for a residential director? If you have a consumer, if you have somebody in your admin pool that's managing consumer funds, that is not an administrative cost, that's a residential cost. Admin, that person doing bank accounts and managing the collective account, again, why would you charge adult day program for that? Why would you charge case management? So just think through the process, and what we're finding is folks are not developing the cost pools that they need to develop, and they're putting things in admin that are not admin. So that's our overarching goal. We're looking for a partner, basically. We're not expecting the auditors to fix everything. We just need somebody on the other side helping us look at this. We do realize that we've got a long way to go here at DDSN. We need to do some training. We need to develop our templates. We need to revise our directive. But in the meantime, we don't want to turn a blind eye to all the issues that are out there. So when you're going through the cost allocation steps, we just need you completing the procedures we've asked, report on it. We're not going to carry a heavy stick. You know, if the findings come in, we're not going to go going crazy with the client at that point. We just, at that point, it's raising awareness. And then we'll work with them to get things fixed. So don't think you're ratting your client out and going to get them in trouble. It's just an overarching goal that we have to get this addressed. So if you'll follow those procedures, I think we'll all be fine.
All right, moving on. Next one is procurement policy. This is for DSN boards only. The auditor is going to determine that the DSN board has a procurement policy, that it's been reviewed and approved by the board of directors. You're also going to make sure that it is in compliance with the DDSN directive 25008 DD. Again, remembering your client can choose to be more restrictive but not have lesser restrictions. So if we say bidding must be done over 10,000, they can't say, well, we want to make it 15. So you're going to make sure that their policy is in compliance with our directive. And then you're going to check to make sure that their policy also includes that conflict of interest statements are obtained for board members, CEO, president, ED, and then top administrative staff that report to the ED, CEO, as well as in this particular case, finance and procurement staff. Some of the best practices, provider policy is approved by the board of directors and coincides with DDSN directive, and that you have completed and signed conflict of interest statements on file for board members and key staff. Key staff. Some of the sample findings that we've had: 3 service contracts, they were not bid properly at inception, and they were renewed, continued without any kind of rebidding for the applicable service. You know, what we don't want to see, I understand there are some contracts that are done, they may be for a defined period with some extensions, but that extension doesn't need to be forever and ever, and then if it's in there, it needs to be followed. Once that extension period ends, it needs to be rebid. Another sample finding, did not follow proper procedures to ensure that all procurement transactions were conducted in a manner that provided free and open competition. Again, we are public entities, it's public money, so we need to make sure that we have free and open competition with regard to our procurements. Vehicles purchased during the audit period were not purchased according to the provider's policy. One purchase was found that was approved 7 business days after the purchase had taken place. And again, that we have conflict of interest statements from the board and from key staff. Moving on. Next step, key staff financial transactions. So the CPA is going to select a representative sample of financial transactions made on or behalf of the ED and top administrative staff. You're going to be looking at travel, credit cards, personal use of agency-owned vehicles, determine if transactions are proper and that the proper tax reporting is being done. Again, if applicable. Some expenditures you're going to be looking at. Again, credit cards, travel reimbursements, and benefits that are appropriately reported for tax consequences. Some of the sample findings that we've had in the past. The ED assigned a new Chevrolet Tahoe with many options. It was presented to the board, but no purpose or employee assignment of the vehicle was mentioned to the board. ED allowed employees to utilize agency vehicles for commuting purposes. There was no taxable consequence to the employees. And then personal purchases were being charged to the provider credit card. All right, question, I guess this is our second polling question on this end.
Yeah, number 5.
How you would describe your position within your organization? Staff auditor, manager, supervisor, shareholder, or other. So again, if you're a board or a QPL, that last one is for you. So other report requirements that need to be considered. As stated, please utilize the templates that are provided in terms of the ROAP and the charts. You know, we do QA these when we get them in, and if we have to look around to make sure that certain items are contained in there, it takes more time on our part, which takes a longer period of time to communicate with you and let you know that we received it and everything's appropriate. So please utilize the templates that are provided. The due date determined by the scope of the report. Again, it's 90 days after the close of the fiscal year, or whatever, for this year only, whatever time period you pick. That has to be in writing and sent in to Chris. And whatever you commit to, we need to have the ROAP within 90 days after that date. Completed report should be filed with DDSN, received within 5 business days of the due date. Any amendments to the report, if applicable, are prepared by the audit firm and then redistributed per the policy. So once you finish your work, your audience reports are addressed to the governing board or management if the provider does not have a board of directors. And then who are you going to distribute the reports to? Hard copies are sent to the ED, CEO, president of the organization, chairperson if there is a board, and then of course DDSN, internal audit. Once we get it, we're going to communicate with you that it's received. We'll review it, send it through our QA process, and we will communicate with you if we need anything. That being said, let me say, we spend a lot of time, our time and providers' times, communicating back and forth about things that are written in to the directive. So once you've approved your draft of this report, if there's any findings in there, you know what those findings are, go ahead and start on your corrective action plan. Doesn't happen very often, but sometimes we get the corrective action plan before we get a copy of the report. We love that. That way, once we get the report, we can go ahead and make sure it matches up, and that's one less thing we have to communicate with you about. So it saves everybody, us and y'all, time if you will make sure that we have, like your caps, your management letters, that are written out in the directive. Go ahead and get those to us. That sort of got off on a tangent. So back to, distribution, internal audit, ED, CEO, and a chairperson if there is a board of directors.
Did you, in the last training session, I don't remember if somebody asked you or if you just mentioned them sending the ROAP electronically to internal audit. Didn't you not say that they could do
Yeah.
that?
We can even-
Huh?
Yeah, we will take, so the financials, we need a hard copy of. We will accept the
That's
ROAP
in here.
electronically. You know, if, again, we will communicate with you. So if you send it to us electronically and you haven't heard from us within a few days, you need to follow up and make sure that we received it. We really try very, very hard to get any kind of communication out within like 2 business days of receipt, preferably the day that we receive it or the next day, if possible, if we get it early enough in the day. So we will take it electronically, but if you hadn't heard from us in a few days, then please reach out to us again and make sure that we have received it. Sometime we can have some technology glitches. Other things you need to know, extensions. So if you need to request an extension, and again, there needs to be some extenuating circumstances here, that request must be in writing, signed by the president and CEO on the letterhead, on the agency letterhead. It's received at least 15 days prior to the due date. And again, it needs to say in writing what extreme circumstances are taking place that you need this extension. Corrective action plans. They must be submitted if the report identifies any kind of material weakness, significant deficiencies, findings, or question cost. Again, once you accept the draft, if any of these are in there, you know what they are. Go ahead and start working on your corrective action plan and get it to us. Providers must address and resolve any identified problems or submit a statement of reasons why no corrective action is necessary. This is it. We have had examples in the past where providers have said, well, we didn't agree with that finding. Well, that should have been discussed with the auditor before it ever made it into the report and been resolved. So if it's in there as a finding, then we're going to expect that we get a corrective action plan for it. So with regard to your corrective action plan or your CAP, it's prepared on the provider letterhead, again, signed by the president, CEO. It includes specific dates of when deficiencies will be corrected. It is submitted to DDSN internal audit within 20 business days after the issuance of the report. We don't mind getting it early. So again, once you've accepted the report, you know if you need to get us any kind of corrective action plan. Any documents that are needed would be included with the CAP. For example, if there was some findings with regard to billings, where billings took place and there was no documentation to support the billing, and you've done your due diligence and you've checked and you can't find any documentation to support the billing, so you need to submit error correction forms. You need to submit that and send that along with your corrective action plan.
And please send us copies. Send the originals to Carol Mitchell.
Right, to the SERB. Originals go to the SERB unit so that it can be corrected, and then we need copies of those error correction forms. With regard to extensions, requests for corrective action plan extensions must be submitted at least 15 days prior to the date that the CAP is due. Again, same stipulations. It's in writing on provider letterhead, signed by the president, CEO, and again, approvals are granted only in extreme circumstances. So, the reason we want all this stuff timely, meaning the reports and the corrective action plans, is because there is a contract reduction for anything that we get late. Contract reductions occur when the ROAP or the corrective action plan is past due. I think we lost the screen again, y'all. We're going to keep moving just for time purposes. So, talking about contract reductions, if the ROAP is not received within 5 business days of the due date, including any kind of extensions, then we're going to start a $100 a day contract reduction. It's capped at $2,500. The same thing for the corrective action plan. If it's not received within 20 business days of the due date, then we start a $100 a day contract reduction, again, capped at $2,500. So you have penalties that can accrue in both of those. So theoretically, a provider could get late assessments for both their report and for their corrective action plan. This is not anything we want to assess. We want any monies given to y'all for services. So please make sure that you're complying with these timelines here. And again, if if you have any type of corrective action plan when you accept that draft report. All right, moving on. Next polling question. After the quarantine's lifted, where would you go out to eat? Quick bite from a fast food restaurant, nicer restaurant for dinner, Olive Garden, Outback, Ruth Chris, and hey, you can start some of this today, I think, or yesterday was when they opened up at 50% occupancy. You've found out that you really like having family time, so you're just going to stay in and have a home-cooked meal with the family, or do you want to go to Chris's house for a cookout, burgers and hot dogs, which he will provide?
Social distancing in place.
Social distancing stays in place, and as I stated last time, the entire dinner conversation will be about Gatsby and FASB updates. So if that's your thing, your answer is definitely D. All right, so what are some resources for ROAP that we have talked about? Again, DDSN website. It has the directives that we discussed. It has 27504DD, which is the audit directive for the boards, 27506DD, which is the audit directive for the privates, for the QPLs. Again, your standards for all of your Medicaid programs that you're going to be reviewing, residential day, EI, respite. There's also copies of manuals out there, like the IDRD waiver manual, finance manual, the EI manual is out there. So please make sure to check that out, review those documents. Again, these are ever changing. So if you read them this year and you make sure that all your processes and procedures are in agreement with these documents, that doesn't mean next year they're going to read exactly the same. There could be some major changes. So you need to check with your client and ask them if there have been any major changes. And then go out and review the appropriate documentations for areas where there may have been changes. All right, so your ROAP filing, as I mentioned, we will take a soft copy. When you email those in, you can send them to my attention, and this is not an or, my attention and Brian's attention, just so we can sort of double check each other and make sure that nothing slips past one of us and hopefully the other one catches. If you're mailing in hard copies, there's the address to mail in any hard copies. And then at the bottom there is our phone number. So if you have any questions, please do not hesitate to call us. And as I say during any of our training, we love questions. We would much rather speak with you and spend 5 minutes, 15 minutes on the phone to make sure that the steps are being done correctly, instead of we get something that gets sent in here and it wasn't done correctly. Now you have to redo work, you have to reissue a report. We certainly do not mind questions, so please do not hesitate to contact us. All right, I think we got through it. So any questions? We're going to give you a couple minutes. If you have any questions, to type those in.
Does anybody online need the CPE link again so that they can complete their attendance for continuing ed credit? If so, if you would just throw a chat in the chat box, I'd appreciate it, and we can paste that link in there again.
And we're going to be sending out surveys,
Yes.
right? So you'll be getting a survey with regard to this training. Please let us know your thoughts. Again, it's something we just started, so we want to know your thoughts, what we can do to improve. As Chris mentioned earlier, somebody commented from the session last week, maybe breaking it out into a training for QPLs and a training for boards, which is probably a good idea. So, I'm sure y'all have plenty of great ideas. Please don't keep them to yourself. Share those with us. We want to make this as beneficial to you as possible. Anything else?
So,
Anybody typing, or are we good?
Nobody's.
yeah, you got our contact.
Linda and Sandy would like to go to Chris's house for
All right.
cookout.
Okay.
Invites on the way.
Ask them medium, well done, rare.
Well done, hot dogs. You have our email addresses. Feel free to email anyone on the audit team that we mentioned at the outset of the training, as well as myself. And we'll do our best to answer those. I know this is a lot of information in a very condensed time frame. Again, we created it from scratch. We didn't really know how much time we needed. So when I send out that survey, I'm sure most of you will say it needs to be longer.
Right.
So.
And as Chris mentioned earlier also, there really is not a lot. I mean, some things have been cut. There was not really a lot of new additions. There may have been some rearrangements of some information where some prior was maybe in the audit report that's now being moved to the ROAP, but it's really not new audit work.
Yeah, I think some of the auditors maybe really didn't understand what the goal was with those areas, and they may be getting into some of this that they haven't previously, but that's to be expected as well. We're not trying to carry a heavy stick or anything. We just got to start advancing the ball and getting to where we can rely more heavily on our information. And I've just had a really hard time since I've gotten here with all the different nuances and how folks have interpreted that. Then I think internal audit has noticed when they go out and look at stuff, they're like, well, why didn't the auditor catch these
Right.
things?
Yeah.
So part of the blame is on us for not being specific.
Yeah, we
So-
definitely have noticed that, things that we have gone out and said, wow, we're a little surprised that this didn't get caught. So again, that's why we're trying to provide this training. As Chris mentioned, internal audit's going to be sort of turning their attention more towards internal operations at DDSN. So we really need you folks operating sort of as our litmus test so that we sort of know if there's somebody that we need to go out and spend some time with in terms of training or reviews or that kind of thing. So please don't hesitate to give us a call.
Did anybody say they need the CPE link? I don't see.
No.
Okay.
All right.
All right.
Appreciate it, folks. Y'all stay safe out there.
Thank you.
Take care.